Hello, and welcome to Rocket Fuel, your daily update. Well, not quite so daily, but your regular update on what's happening in RocketPool and Ethereum and crypto. My name is Wack. Today is August 12th, and today's episode is going to be an absolute banger of an episode, like a really, really good episode. A lot of bullish stuff in here. So we're going to start with talking about price action, of course, and kind of what got us to where we are right now. On RocketPool side, we're going to be talking about Charles Allen, CEO of BTCS, and some really cool stuff that's coming out with that. And we're going to be talking about rETH price as well, which is interesting. On the Ethereum side, we're going to be talking about L2s. We're going to be talking about the next Ethereum hard forks and the discussions around that. We're going to be talking about economic security from Ethereum, a new EIP that's gaining some traction. That's quite interesting. And we're going to be talking about the strategic ETH reserve, of course. And we're going to be talking a lot more about, well, it's just so much stuff, like really, really, really huge stuff. So make sure you watch all of it today. Let's get started.
10, 9, ignition sequence start, 6.
Okay, so when I was gathering links for this episode, I realized that it's been a few days since I recorded an episode, and a lot of things have happened since then. Like some really, really, really fun things have happened since then. So this is a tweet from the 7th where Uncle Rewards was saying $100 million worth of ETH shorts will get liquidated if the price goes to $3,913. You know what to do. And then very soon after that, we had another post here from Wrecked Fencer saying $1.69 billion worth of ETH shorts will get liquidated at $4,100. The short squeeze is coming. So that is something that's been very exciting for the last few days and weeks. And yeah, what you see is that the ETH has been doing really well. It even flipped BTC positive in year-to-date returns, which of course is very good to see. But let's actually just cover some more of these tweets before we get to the price and show you where things stand. So one of the things that was contributing to the price was these huge, gigantic flows that were coming into the spot ETH ETFs. Yesterday was actually the first $1 billion day, which is absolutely amazing to see. And it's something that I've been saying that is going to happen for quite a while, but of course it hasn't happened yet. One of the things that's really interesting here is that this is the first $1 billion day for ETH, but because of the relative market cap difference, Bitcoin has had six $1 billion days. Because of the relative market cap difference, what you see is that the impact on ETH's price because of this is actually a lot higher, and it's the equivalent of pouring over $4 billion into BTC in one day. So that just shows you how amazingly well these ETFs are doing. They're definitely punching above their weight for the fact that ETH is a much smaller asset than BTC. Now, if you actually have a look at the ETFs, there were a couple of days, well, we actually went on a huge run where we had, I think, 20 days of positive flows, but it was really petering out with the last couple of days there, being 5 million and 17 million. Then what happened is on the 1st and the 4th of August, which is the Friday and the Monday, we had quite a bit of a sell-off, $152 million out and also $465 million out. So that was a big hit. But then last week, what happened is, we had 73 million in, 35 million in, and then the week finished really strongly with 222 million in and 461 million in on Friday. But then yesterday we had the all-time high day for Ether, which is the BlackRock ETF. We had the all-time high for Fidelity ETH, which was just huge numbers there. So this was just really, really amazing to see that the ETFs being bought so strongly. And what's really interesting here is that if you actually compare the price to Bitcoin ETFs, ETH has been far outpacing BTC. So remember I said there were 2 outflow days around the beginning of August. Well, BTC had 4 outflow days at that same time, including one that was $812 million, which is nearly $1 billion. But then after that, BTC has shown some strength and increased the inflows, but nowhere near relative to ETH. In fact, yesterday when ETH had its $1 billion day, BTC only had $178 million inflows. So it was a lot smaller. So what this shows is that all attention right now is on ETH. That's the coin that everyone's watching, and it's actually showing in the market prices as well. So one of the things that people have started talking about is the flippening, which I'm a huge supporter of. I'm a huge believer that ETH will flip BTC in price at some point in the future. Now, I'm not going to say when that's going to happen. I think it's going to happen sooner rather than later, as does Joe Lubin. But it's going to happen. And one of the things that is really cool is this Ultrasound Money account put out a tweet saying the flippening is FUD. ETH will eventually be 2 times, 5 times, even 10 times larger than BTC. The thing is that BTC has the meme value. That's meme value. And the meme is that, there's a hard cap of 21 million. There's a chance that's actually going to go away because of the security budget issues, which we're going to talk about later as well. And, it has the first mover advantage. But as soon as there's a chink in the armor of BTC, well, basically just ETH running up a lot, and the narrative being so strong, I think that is going to make people reevaluate what the purpose of BTC is, because, if you can have pristine store of asset like BTC, awesome. But you can also have a pristine store of value asset like ETH that actually does stuff that is so much more valuable. So, once ETH flips BTC, which I'm hoping will happen, at that point, I think the rest of the memetic value from BTC will just go away, and ETH will just surge. That's my hope. That's my belief. And I am positioned accordingly, let's just say, by not holding any BTC. Maybe, yeah. Anyway, that wasn't it, right? So, what we then see as well is that this is Ben Cowan, who's calling for ETH to go home for a long time. And then he says ETH went home. I take some criticism of that position, but this is now him posturing, in the pro ETH stance, saying alts are down 50% against ETH since April. As I said below, this was ETH season, not alt season. As long as ETH BTC goes up, so too will alt BTC pairs, but alt ETH pairs will likely bleed for about 1 to 2 more weeks before they get a relief bounce. And here you see that, in the chart, like what he's showing here is the price of all the cryptos except BTC and USDT charted against ETH, and that they peaked in around April, and since then it's been down only basically compared to ETH 50% down, which is huge. But it's actually other tokens have gone down even more than that, which we're going to talk about in a little while as well. And then this is just all of this so far. I just kind of been a prelude to talking about the price, which I'm going to be talking about next. But today we had the CPI report, and this was, the consumer price index, and it shows that inflation, the price rises were 0.2% month over month, which is in line with the estimate 0.2% as well. And year over year was 2.7%. Versus the estimate 2.8%. So that number came in a little bit lower, which is good. And then with US core CPI, that expected 0.3, and we got 0.3, and the year over year 3.1, but expected was 3.0. So those numbers were definitely in line with what the expectations were, and this was extremely bullish because there was a fear that inflation numbers were going to rise significantly, and with them rising significantly, it would mean that there would be no rate cuts coming in September, and no rate cuts coming in September would mean that we'd likely to remain in a risk off environment for longer. But if this is a risk off environment, I'm scared to think about what a risk on environment would look like. But this all so far, what I've been saying is like, summaries of some of these things from the last few days about how people are thinking about the price and what kind of stuff is happening with the price. Let's actually go and have a look at the prices now. And if you haven't seen the price, this is going to be a very, very pleasant surprise. So as of a few minutes ago, wait, my screen's being really slow. As of a few minutes ago, we have a look at the ETH price here. It has a peak of $4,506. I actually saw it go up to $4,512. So that is performing incredibly strongly. It's just been up so much, in the last week. In the last pretty much week, I think since August 5th, it's up $1,000, which is like nearly 30% basically, which is just a huge move for an asset of this size. Now, other assets are moving as well, of course. So, ETH is going up, but ETH it's outperforming pretty much everything else. Right now, the price is $511 and 56 cents. Oh, actually $504. It's fluctuating a little bit, but let me see what we've peaked at so far. we have peaked at $4,518. So this is now less than 10% from its previous all-time high, which of course was in 2021. And I think the catalysts are all there for us to either hit that or get very close to it in the next couple of days. Yeah, that's very exciting. So RPL, of course, this is a RocketPool themed show. RPL has been doing okay. It hasn't quite held up to ETH, but nothing really has held up to ETH these last few days. It had a good moment a few days ago, but then it's retraced that a little bit, and it's just kind of trying to hold on right now. BTC actually is performing decently well, and it has, tried to make an approach for a new all-time high, but kind of failed yesterday. And it's sitting at just below $120,000 right now. So that's doing really well. The one of the charts that's really interesting is showing you how alts are bleeding against ETH. This is the Sol ETH chart. The price of Solana versus the price of ETH, and this is zoomed out all the way through to January when Sol had its all-time high against ETH, and the all-time high was 0.09366. So since then, it's oscillated a little bit. It's gone down and gone up. But since April, that's when the Ben Cowan's chart bottomed as well. Since April, it's just been down only. So from the all-time high, it's nearly 60% down against ETH. And right now it's at 0.04022. That's the low today, and it's had a tiny bit of a bounce since then. But what's really, really powerful here is the fact that it's hardly had any relief bounces during that period. There's just a couple of times when it's gone above the 7-day moving average even, and only 2 times that it's just touched or kind of gone near the 25-day moving average. So this is an incredibly weak chart when it comes to crypto, and this is definitely ETH's time right now. That just shows you how strong ETH has been. If we have a look at the ETH BTC pair, you'll see that is performing really well as well. Sorry, I didn't have that chart open, so let me find it here. That is now up to from the lows of April, where we were at 0.01766. We are now at 0.03777. So that's a more than 100% increase in price against BTC in that time, just showing that ETH has been incredibly strong recently. And I think that this run has still got legs to go, and that is going to be very exciting to see. Okay, so we've talked about price. Now it's time to talk about RocketPool, and the only place to start with RocketPool is my interview that I had with Charles Allen of BTCS, the CEO of BTCS. Let me actually change that screen. Yes, so here there's a tweet saying episode 25 Launchpad, talk to Charles Allen, CEO of BTCS, and that's BTCS now, of course, an ETH treasury company. And Charles talks about working in the early days of Bitcoin, pivoting to Ethereum, staking with RocketPool, and what sets BTCS apart from other digital asset treasury companies. So this episode actually was really, really good listening. Charles' story is fascinating. Getting involved in the early days of Bitcoin, there was a lot of stuff to talk about from those early days, but the parts that were really interesting was, why they pivoted to ETH in around 2020, and how they became ETH stakers, how they became stakers with RocketPool. And then the section that was really interesting was talking about, the strategies that they're going to use to try to maximize yield for their shareholders, and how something like rETH might fit into that. So this was actually a really, really great chat. It's actually one of the biggest episodes I've had out on Twitter, and this had 145 likes and 43 retweets. But the interesting thing here is that it has 28,000 views on Twitter. So that means not all of those people watched the whole episode, but I think people engaged with different ideas within the episode, and that was incredibly exciting. That the reception for that was so strong. So thank you to everyone who watched the episode. If you haven't watched the episode, you should definitely go and watch the episode. You can find it on YouTube. You can also find it on my Twitter. Of course, the link for that is below. Send me a comment. Let me know what you think of it after you watched it. And you can share it with your friends as well if you want. But it was really bullish RocketPool. And one of the things that actually happened afterwards that was very, very curious was, here King replied to the video saying, when RPL Treasury? And I replied by joking by saying, let me talk to some whales I know. But Charles, the CEO of BTCS, of course, he replies by saying, let's talk on this. So that was really, really interesting to see. And I said, I've got a lot of ideas, and Jasper has too. And this is really interesting to see, what they're thinking about in terms of RocketPool and rETH. I'm hoping that we get some interesting news coming from BTCS in the coming days. But if anything comes from those conversations, you'll find the news about that on Rocket Fuel, of course. And then Jasper here said, is RPL about to get a treasury status? The SEC just gave the green light to rETH. Charles BTCS already runs RocketPool nodes. The next step would be taking advantage of the fee switch that's launching on August 29th. So if you stake your RPL with your node, you get ETH rewards. That is going to be a nice boost. If anyone holds RPL, of course, the fee switch I think is massively slept on right now, and people just aren't aware of what's going on with that. So yeah, and then we have Charles. With Charles here, he was on the community call with RocketPool last week, and there's some really nice audio clips here that have been pulled out by the RocketPool account, saying an Ethereum treasury strategy can be much more than just holding ETH. Nasdaq BTCS, a public crypto company leveraging the permissionless RocketPool protocol smart contracts to generate higher staking rewards. RocketPool works whether you're managing large financial institution or want to run a single validator from home with just 8 ETH. And if you missed it, then there's some snippets here, so you can listen to the whole episode as well. But here, Charles says, an ETF is like buying Ethereum. The next phase of that, and that's where you are, is you get the 1-to-1 on Ethereum, plus you get the staking yield, plus we're amplifying that through the efforts with RocketPool. We're amplifying that because we're a block builder and generating revenue there. So they're using RocketPool, to do their work, which is really cool. And then here, again, the RocketPool account says, why risk your funds with a custodian when you could earn 50% more ETH with RocketPool? Nasdaq BTCS explains how they avoid paying fees to a staking provider and instead leverage RocketPool smart contracts to earn bonus staking commission and supercharge their rewards. So it says, if we can run nodes on solo basis, obviously we can do better than outsourcing that. But if we can run nodes for RocketPool, then we can bump up our yield. I think it's around 35% higher. So it was kind of a no-brainer once we figured out how to do that with a public company. So yeah, they've been using RocketPool for a while. It looks like they want to keep using RocketPool. So that is awesome. And with the SEC's rule changing last week about companies about LSTs not being securities, Charles explains in the interview that I had with him that previously, the SEC would let a publicly traded company hold securities on their balance sheets, but there was a certain threshold at which they could hold it and not above that. However, with changing status of the LSTs, as not securities, being commodities, that has changed how they could hold that. So it would be really interesting to see how that plays a part in their future DeFi strategies. But definitely go and watch that interview. I think it was a really good one. I've had really positive feedback from that. So I think you might enjoy it. Okay, next we have a really interesting, wonderful milestone here, and this is an all-time high price for rETH, and that is actually really, really cool to see. So happy all-time high day if you are a holder of rETH. The price, of course, started off pretty decently right as the protocol launched. Since then, the ETH price went down, so the rETH price went down, but of course, the rETH is a token that has been earning rewards as ETH has been earning rewards. And you can see that today is the all-time high day. And the performance, actually, the ETH chart for the last year now is looking really good. So it's 70% up over the year, 30% up over the last, 50% up over the last 30 days, 20% up over 17 days, 25% over the week, 5% over the day, and 1% up over the hour. And you can see the all-time high is hit right now. So this number that you see on the screen is the all-time high price for rETH, which is awesome, absolutely amazing to see. So congrats to rETH holders. Okay, next I have some news about the LST reclassification, and this is a tweet from the RocketPool Twitter account, and it's just my computer's being really slow because I have so many tabs open today. So they're sharing the news of the SEC saying that LSTs are not securities anymore. And the RocketPool account says RocketPool invented liquid staking on Ethereum all the way back in 2019 as a new solution to an old problem. And now the SEC agrees with us. With regulatory clarity in the US that liquid staking is not security, everyone from individuals to large financial institutions can enjoy the increased confidence that rETH is a compliant gateway to Ethereum staking. And RocketPool is also the most decentralized way to participate in Ethereum liquid staking, the only protocol that has been fully permissionless from day one. When you liquid stake with RocketPool's rETH token, you're directly supporting thousands of home node operators worldwide to defend Ethereum's core values of credible neutrality and freedom from censorship. And then there's links from there. So this was a really nice messaging coming out from the RocketPool Twitter account. They've been putting out some fantastic content recently, doing a really great job of getting RocketPool's messaging out there. So yeah, that's a huge milestone. So it's really great for the RocketPool Twitter account to kind of talk about that. Okay, so we had the latest GMC grant application round finish, and this was round 27. That closed, and the main grant request that came out of this was Saturn 2 rETH improvements, enabling withdrawals and protections. So what is this grant covering? So this grant will cover the cost of research, governance, spec development of the two features below, with the goal of them being included into Saturn 2. So one of those is rETH withdrawal liquidity via forced exits, and the other is rETH protection from underperforming nodes via forced exits. So this is actually really huge benefits that rETH needs. And it looks like the community is wants to start work on this and really use it to help rETH become a much better token. There's a bunch of people who will be working on this, like Ramana, Samus, Valdorf, Noshua, Halulo, and other members as well. And they are asking for $25,000 because the work will need to be done in the next 2 to 3 months to be included in Saturn 2. So there's information about how this might be split, but yeah, this was the main grant that was applied for. So it's going to be really interesting to see how the GMC votes on approving that. As a GMC member, I really shouldn't say anything. Okay, next we had, like I said, a RocketPool Twitter account has been putting out some really great posts recently. So they've got a couple of posts here about governance in RocketPool and in crypto. So it says, who really controls your DAO? RocketPool has leading governance system, its permissionless decision-making, robust voting mechanism, and decentralized on-chain execution. So it's the only staking protocol with built-in alignment into Ethereum's core values since day one. So this was, again, a really nice post. And then they had another post kind of explaining how it all works here. It says governance without VC decentralization theater. RocketPool's development is controlled by the largest community of Ethereum advocates. That's why we've built things that better the protocol instead of enriching insiders. And then Vitalik quote here says, even $1 billion of capital cannot compete with a project having a soul. So of course they're arguing that RocketPool has a soul. Now what's really interesting here, and I'll tell you this is actually quite amazing, that I personally, have more vote power than people who work on the RocketPool team. In fact, like I think the top 2 community members have more vote power than all of the team combined. So that's really amazing that community members are the ones that other community members trust with actually performing governance. And another thing that's really great here is that this isn't decentralization theater. A lot of the decision making and planning and work comes from community members. Sadly, in the last couple of years, the number of people who actively are participating has slowly gone down. But there's a great core of users who, community members who are here every day and who are contributing to RocketPool every day. And that is absolutely amazing to see that, people are doing that. And I think it's really wonderful that it's happening that way. Now, how's that going to be going forward? I think that, with more attention coming to RocketPool and more an RPL price going up, hopefully, some of those people who stepped away from crypto for a while will come back, and they'll make the DAO even better, hopefully going forwards. Okay, next we are moving on to some Ethereum news, and we are going to start the Ethereum news with this post from Vitalik, which I thought was really interesting. So he wants to reimagine how the L2s are on Ethereum work, and he says that actually more important than for L2s than going to stage 2 is reducing the way that their proofs work and having fast withdrawals from the L2 down to Ethereum mainnet, the L1. And he says the goal that they should have is for fast withdrawals down to 1 hour instead of 7 days that we have with optimistic rollups. And he says this will be enabled by ZK proof systems. He says I consider this even more important than stage 2. And some of the reasons that he gives is, because it just is much better for interoperability and for people using crypto that they use the native bridges. And in that case, what they do is, right now they have to wait longer, and to make them wait less amount of time, it'll just be a better experience, and how this is a huge UX improvement. And then Vitalik kind of gets technical here about how it could happen and what it might look like. And he says in long term, we can solve this with aggregation, and proofs from end rollups can be replaced by a single proof that proves the validity of the end proofs. This becomes economical to submit once per slot, enabling the endgame near instant native cross L2 asset movement through the L1s. So he says let's work together to make this happen. So then there's a screen, details here of the leading L2s being stage 1 rollups, which of course is really good. So yeah. It's really, really exciting. So I want to start with that technical stuff. I'm actually going to talk about more technical stuff before we get to the price stuff, because I know that is something that people like. But Thomas here actually put out some posts talking about Glamsterdam and Fusaka. And he says Glamsterdam may be getting some attention. It's a fork that will come in Q1 or Q2 of 2026. In the meantime, we should be more concerned about any potential delays to Fusaka, which is estimated for Q4 of 2025. It says, as I've said many times, no amount of talking about Ethereum's roadmap and vision matters if we cannot achieve coordination levels that consistently meet goals on schedule. I know that some extremely talented people are now working on resolving the issue that caused teams to suggest moving the dates. I would love to see a broad agreement that the timeline matter a lot. And then he reinforces that by saying a lot again. And he says, I've suggested coordinators a few weeks ago to stop discussing Glamsterdam and focus on delivery of Fusaka. Maybe sometimes less all-core devs calls may help with the process. Maybe the future forks call should not be happening when the current fork testnet timelines are at risk. So that actually spurred a lot of discussion, as you would imagine. And let's actually talk about some of the feedback that Thomas got here. Actually, sorry, that's not the right tweet. Wait, that might not be the right tweet either. Sorry, hold on a second. This is my bad. Oh, that's wrong as well. Actually, sorry about this. Oh, one of the ones, the tweets that I found really interesting was this one from Ryan. I'm sorry, I didn't have it open and then I closed my window. I'm sorry. Yeah, here we are. So Ryan Berkmans says, as calls for Fusaka to ship this year intensify, knowing that this may or may not be realistic, in my opinion, it's important for us to remember that ETH's value proposition depends not on zero downtime, but also on credible neutrality and risk minimization for users. It says Ethereum is on track to grow to global ubiquity, and ETH is a multi-trillion-dollar asset. Giving the public any reason to doubt ETH's distinctiveness is now one of the only practical ways to potentially derail our success. He says it's wonderful to see the consistently rising level of ambition and dedication in our core dev community to ship the best things as fast as possible. Ongoing blob space capacity increases are particularly urgent. We are already using more than half new capacity added in Pectra 3 months ago, yet maximizing ETH's safety and long-term reputation must come first. Our forks must not only execute flawlessly, but have the credible appearance of flawlessness and risk minimization, as we've always succeeded in doing. It says, personally, it always felt to me like Fusaka was likely to land in Q1. I had successful contrarian predictions for the launch dates of the merge and Denkun, and to a lesser degree of Pectra. If Fusaka launches this year, I'll be left wondering if it was actually ready or rushed. He says, I'm glad we're feeling the urgency to increase blob space for our incredible customers that are growing insanely fast. ETH is in a new era of customer centricity, but credible neutrality and risk minimization must come first. None of us wants to wake up to a world where Ethereum has suffered a disaster and has seen as watered down commodity public blockchain instead of unique global hub. So my opinion on this is, like, I understand both takes. Like, I love Tomas's urgency, and I really like that, he is lighting a fire across the whole, dev community. But I also understand Ryan's perspective here, especially since, the zero downtime in 10 years has become such a sticking point for the community, right? And for people cheerleading ETH right now, that is one of the main points that they use to, declare why they support ETH, is because it's a unique asset in that sense that is just so strong. Well, not unique, but others have had zero downtime as well, but not at the size of Ethereum with the size of its imagination and deliverables in terms of updates. ETH is unique in zero downtime, so that's amazing. I kind of understand Ryan's perspective, right? Because with that being one of the core pillars that we are using to support ETH and kind of helping people understand ETH's value proposition, if we even slightly put that at risk, it really can derail everything. So I think, these two sides of this discussion will kind of vacillate, from one side to the other, where, we get a bit more aggressive, then we get a bit more conservative, and a bit more aggressive and a bit more conservative. And we'll probably find like a good systems and good frameworks for our upgrades going forwards. And I think we'll hit a really good cadence for that. So I'm not too worried. I think core devs will not ship anything unless they feel like it is 100% ready. But also, I don't want them to wait too long to do that. It's going to be interesting to see when Fusaka actually lands. Okay, and then what's going in Fusaka? Well, here we have update from Pooja talking about all core devs, and this is from the 7th. So the DevNet planning updates, of course, the EIP slate is locked in place now, and there's some schedules, of how it's all looking. And the schedule here is, there's information in this tweet thread about DevNets, and the DevNet 4 is live right now, and then there's information about the timeline being under review and what it might look like with mainnet potentially being in November, but that, like Thomas and Ryan were talking about, might be moved around a little bit. But then there's some information here about Glamsterdam as well, about the things that will be going into Glamsterdam and how all that's looking. And it looks like the headliners for Glamsterdam will be EPBS, and that's slated for inclusion. And then Fossil is being considered for inclusion as well. So we're going to see some interesting developments coming with that as well, as that slate gets set out and testing begins. So that's really exciting stuff. Okay, let's move on to we have and then EPBS there as well. So that's what I just said. It's considered to be the headliner of the Glamsterdam hard fork. Sorry, Terence. I think there's one more tweet from Terence here as well. Yeah, and then that's about Fossil, which we just talked about as well from Pooja's tweets. So good stuff. Okay, we said that we were going to talk about Bitcoin and the flipping earlier. Well, we got this really cool post from Justin Drake talking about ETH's economic security and the level at which it stands and how it's now 10 times flipped the BTC economic security. So ETH has economic security of $150 billion, whereas BTC has economic security of $15 billion. And then that is basically the way that he calculates that is the number of ETH multiplied by the price. So the amount of ETH staked multiplied by the price. And with Bitcoin, it's the 1 billion terahashes per second times by $15 per per terahash. So that's how you get that number as well. So if you were trying to attack BTC, it would cost you $15 billion. If you tried to attack ETH, it would cost you $150 billion. Of course, that number is not correct. The correct number would probably be like infinite dollars, because, you know, if you don't have any stake online right now, just accumulating 35.7 million ETH to reach, you know, 50% of the network. Well, the main numbers are, you know, 33% and 66%, but you know, accumulating 20 million ETH just to impact finality would cost you way more than $150 billion. And then to attack, you know, finalization and like cause forks to happen, not finalization, sorry, to cause forks to happen, that you would need 100 million ETH basically to get to the 66% threshold. So ETH is pretty much unattackable, I think, right now. With the way things stand, and that's absolutely amazing. So yeah, if you want to attack BTC, it's possible to do it. And the great thing about ETH is as well, if we notice that someone is trying to accumulate ETH to attack ETH, or if they have started to try to attack ETH, then we could, as a community, fork those ETH out and just burn that ETH. So the punishment for trying to attack ETH is humongous, like literally, like you would be burning millions, tens of millions of ETH, if not, you know, many tens of millions of ETH in the process. Of course, you know, you would damage ETH significantly. You would really hurt ETH, but, you know, ETH has a way to come back. Whereas with Bitcoin, if you, you know, assemble the compute required to attack ETH, you know, for $15 billion, attack BTC, they can't shut off your miners, right? Like the only way that you can resolve that attack is if you change the hashing algorithm, but that will change the hashing algorithm for all the miners who are out there. So I think that would be a much more disastrous occasion for BTC than it is for ETH. And we're actually going to talk about this towards the end of the episode a little bit more with a case study. So yeah, but this is actually really interesting perspective that Justin Drake shared. And I think a lot of BTC maxis are kind of angry with him about this, but that's the reality. And like I said, we're going to talk about a case study at the end of the episode. Okay, next we have an EIP that is hopefully going to go into Glamsterdam. And this is EIP 7999, which is Unified Multi-Dimensional Fee Market. So other blockchains have fee markets that are localized fee markets, and it looks like that could be coming to Ethereum with this research done by Anders and EIP 7999. So it says Ethereum is like a supermarket, like a grocery store that has just one price for everything. There are 45 million eggs, 45 million gas for cheese, 45 million gas for snacks, etc. But you know, what if you could reprice things depending on how it worked? So here we have Anders kind of explaining how certain transactions would use more gas or less gas, and you could kind of move it around depending on how you do that. This is an EIP that Anders proposed with Vitalik, and let's use a single max fee for each transaction, moving away from separate max fee per gas, max fee per blob gas. So it says this increases capital efficiency, improves UX. So it says this is really cool to see. There's still technical details that I haven't really dug into, so I will try to learn about those and teach them to you all eventually. Yeah, this is the announcement of this that could potentially, I don't think it's going to make Glamsterdam because I think it's too early in the phase, but probably would be in the upgrade after Glamsterdam. So that's really cool. Okay, what do we have next? Next, we have some really upsetting news that came from Fede's Intern. And Fede's Intern, of course, they're working at, Class Lambda, which is a new Ethereum client. But Fede landed in Turkey and was arrested upon landing at immigration, and was told that they are being charged with using Ethereum badly, like using it in a misaligned way. And Fede's Intern here, like, basically has no idea why why that could happen. And the only thing that I could think of was that they wrote a paper a few years ago in 2019, I think, talking about how to de-anonymize Tornado Cash, but because Tornado Cash was on OFAC sanctions list, it might be something related to that, which is the reason why Fede's Intern was detained. That that was really scary. So what they did was they got a local attorney and called a lot of friends and supporters, and were able to leave Turkey, thankfully, while still continuing with the case. So he says that, our local attorney is waiting on our defense. We don't have the full picture of what happened or why it happened, but we'll bring in the best team we can to resolve this. If needed, once things are sorted, I'll come back to clear my name and defend ourselves. We have great local connections and lawyers, and I'm not sure I'll be able to tweet about this until we sort things out. So there's the paper, and yeah, you can see that, it was about a tool for assessing user privacy on the Ethereum and Tornado Cash. So yeah, that was really scary that, people working on Ethereum could get arrested like this for research that they've done potentially, or we don't know what exactly yet. Okay, talking about people getting arrested, we have Roman's appeal. Roman Storm's appeal is still going ahead. Of course, he was found guilty of one charge, and 2 charges were left with a hung jury. So it's up to the DOJ to decide whether they're going to retry Roman on those 2 charges or not. What's really great here is that the Ethereum Foundation, here the free Alexia and Roman Twitter account says that the Ethereum Foundation has generously offered to match up to $500,000 in further donations to support Roman's legal aid. Roman risks up to 5 years of jail time because of that one guilty charge, and would then need to potentially go back to court for the trial to be retried for counts 1 and 3, depending on if the government wants to bring those charges again. So yeah, this is really great that the Ethereum Foundation is giving money towards this. We really need to protect our own. And here's Shaway, the co-executive director of Ethereum, saying that the Ethereum Foundation will be matching up to another $500,000 in donations to the legal defense of Roman Storm. Privacy is normal and writing code is not a crime. The community can contribute to Roman's legal defense here. And then there's a link, freeromanstorm.com. So this is absolutely awesome to see. So, you might be thinking, hey, look, if I give $500,000, then that could get matched up to, $1 million, which is really cool. Except that match has now been filled, and it was filled by Fede's intern. So Fede's intern, of course, the person we just talked about getting arrested in Turkey. So they said, I decided to donate $500,000 to Roman Storm's legal defense. Originally, we had planned to give $50,000, but after what happened to me in Turkey, I need to take a clear position so everyone understands what class Lambda stands for. He says, I understand that the Ethereum Foundation will be matching donations up to another $500,000 for Roman Storm's defense, which means our contribution can have double this impact. Our team is currently moving money to execute the transaction. It should be done in the next few hours. I'm going to sleep after not sleeping for the last 48 hours. So this was such a great update from Fede's intern, just talking about how, they saw that more money to Roman was needed, and we need to send a clear message that, we're going to support our own to make sure that they don't get caught. Okay, there's a nice little update here about the Ethereum ecosystem, and this is an update from Token Terminal saying that Ethereum's ecosystem TVL has surpassed $300 billion, and this was actually from 3 days ago. So I wouldn't be surprised if that number is even higher now. Actually, probably closer to maybe 350 billion or 400 billion. Let's see if I can find it. Token Terminal. Let's see if there's a link. Let's just go to Google. Okay, there's Token Terminal, and we can see here that, in the Products Explorer Token Sheet Resources. Okay, I've not used this website in a long time, so I'm not sure exactly what I'm supposed to be looking at. Let's see if it's here. No, that's Explorer. Oh, get started for free. Yeah, sorry, I don't have access to this. But yeah, it's really cool that the ETH TVL is hitting all-time high numbers. Of course, in 2021, the price of ETH was higher than it is right now, but at that time, the amount of TVL in the protocols wasn't as high. But now we're hitting these all-time high numbers. So yeah, like I said, like because that number's from 3 days ago and the price has gone up so much, it's likely even higher. So that of course is really great. Here, one thing that's really cool, if you have a look at the protocols that I mentioned, RocketPool is actually mentioned here as number 14 in terms of TVL for contributing TVL to the Ethereum network, which of course is really, really cool to see. Okay, next we have an update to the Coinbase app, and they have now rebranded to become the Base app, and they're integrating it really strongly with the Base ecosystem with the Coinbase platform as well. So here, Brian Armstrong says, we're starting to roll out DEX trading in the US, excluding New York. Our goal is to make Coinbase the simplest place to access on-chain markets, is to be able to trade millions of Base assets in the crypto app, in the Coinbase app, and they're looking to add support for Solana soon too. So the way this works is they are integrating a whole bunch of different apps and experiences into the Coinbase app. Now it's just going to be called the Base app, and what they're also doing there is adding DEX trading, so you'll be able to trade all the assets that you love that are on Coinbase, but also what you can do is now find assets that are not listed on Coinbase. And I think this is an integration with Aerodrome that they're doing, so any liquidity pair that is on Aerodrome, you'll now be able to trade that straight from one app. So you'll have access to your centralized exchange funds, but also your decentralized funds as well, which is really, really cool to see. So yeah, that's going to really help users kind of bridge that gap between centralized exchange to actually being on chain and being on the Base L2. Okay, speaking of L2s, here we have an update from Geos, and this was the person who runs Axie Infinity, and their sidechain Ronin, and they made an announcement at the Ethereum house in San Francisco saying that Ronin is coming home to Ethereum. They're going to be upgrading Ronin soon to actually become an L2 of Ethereum, which instead of just being a sidechain, which is really, really awesome to see. So huge congrats to Ronin here. As the market heats up and as more attention comes back to crypto, I think that people might start playing Axie again. I think they've got a whole range of other games now that you can play. And of course, that data will now be as an Ethereum L2, which is really, really cool. Okay, so let's talk about the strategic ETH reserve. This is actually huge. I want to bookend it with the price talk at the beginning of the episode, with strategic ETH reserve talk at the end of the episode, but they kind of go hand in hand because strategic ETH reserves, work together with increasing the price, thankfully. So here we have an update from Unfolded saying that there's a new SCR or digital asset treasury company, and this is called Fundamental Global Inc., and they have filed for a $5 billion shelf offering that they intend to use to acquire Ethereum or the ETH basically. So what's really interesting here is if you listen to my call with Charles, you'll see that applying for a shelf is actually really easy to do. You just fill paperwork with the SEC and pay a small fee. I think it's 0.01% or 0.001% of the amount of shelf that you're requesting, and then you can start trying to raise that shelf. Now, just because they're saying they want to raise 5 billion doesn't mean they're actually going to be able to raise 5 billion or stuff. But what's really great here is that it becomes a huge marketing point where people will now automatically remember, hey, there's Fundamental Global who are trying, and in their minds, people just think that they've already raised 5 billion and they'll be deploying it to ETH. But that's not how it works. They'll be doing a pipe offering for early investors to get shares, which will be tradable later. After that, they'll be doing ATM sales, most likely some kind of debt notes, all that kind of stuff to raise money to get to that 5 billion amount. But that's the permission that they've got from the SEC now to try to raise that to become an ETH strategy company. So yeah, that's a huge amount of money, but a little bit below the surface, I think it's a bit more complicated than just what they're saying. And here they've kind of started memeing about it already. So here, Fabrice says, hey, Bitmine, have you seen this? the FG Nexus just called your supply target respectable. So FG Nexus are saying that they want to go all in Ethereum and they want to accumulate 10% of the supply of ETH. This is from yesterday, and they said that Tom Lee's buying of 5% is respectable, but we want to go for 10%. So that is, of course, more grand talk. It'll be interesting to see them actually buying the ETH as it is. But yeah, here JRAG had some tweets that kind of referring to saying about how kind of pitting Joe Lubin and Tom Lee against each other about them acquiring more and more ETH. And he says this is a deep, deadly psyop trick, which will add more ETH to market cap, is to get these ETH treasury companies to kind of start competing with each other. So there's a whole lot of money that people are kind of allocating and trying to work towards. And here, this was from Friday. And what happened on Friday was that the volume of trading for Bitmine and Esper was really, really high. So normally what happens is as the volume's high, then those companies sell into their ATM shares into the liquidity and into the volatility. And as they sell those shares, then they will use the money that there is from that to buy more ETH. So there was huge market set up for them raising a lot of money over the on Friday and last week. And then what we saw was so here, Joe Lubin here says kind of talking about how to make SBET more valuable, trying to increase their yield, and the way that he's thinking of doing that is by integrating with Linear really closely, I think, and they're coming up with ideas of how to integrate the ETH from Esper into Linear. So there's going to be some interesting things happening over there. I'm not sure how it's all going to play out, but Joe Lubin seems really excited about that. And then we had these updates from Bitmine, and they have broken the game. So that $400 million that they were able to raise on Friday, they used that over the weekend. And this is news from yesterday morning, where they have now accumulated 317,000 ETH more over the weekend, I guess since last week's announcement, and they now hold 1.15 million ETH, which is just a staggering amount of ETH. So Tom Lee is now already over 20% of the way to nearly 25% of the way to reaching their 5% of 6 million targets. So just under 20% of reaching their goal of controlling 5% of ETH, which they're putting that's how you do it, right? You don't just say, oh, that's respectable, and try to whatever, like you actually have to buy the ETH, and that's what Tom Lee's doing. So it's truly incredible what he's doing. And then here Ryan Sean Adams says the crazy motherfucker actually did it. Tom Lee is the first to reach 1 million ETH. It says new buys show that they've got 1.2 million ETH, which is $5 billion worth. So in 1 month, he's made it 20% of his way to acquire 5% of all ETH supply. That with this actually, Ryan says that it's 12 times faster than Sailor, but it's actually faster than that because I think that wasn't including this number when Tom Lee made that statement on Bankless last week, saying that he's raising 12 times faster. But this raise nearly increased their amount by 40%, just staggeringly fast, like ridiculously fast. So this Twitter account started this week. So if you want to see tweets about strategic ETH reserve, this is the place to go get those tweets. And it's telling you about ETHZilla, what they're trying to raise, how Peter Thiel is getting involved with ETHZilla as well. And they have acquired 82,000 ETH now, which is a lot of ETH. And then I'm trying to see if we have the Esper data at the moment, but it looks like that's not available. Let me try to go to the actual website and see if we have updated numbers for Esper here. But the amount of ETH accumulation is just astonishing, absolutely astonishing. So if we look over here, you'll see that Bitmine now 1.2 million now rounding. Esper is still at 600,000, so that number will need updating, I think, this week. And then we've got ETHZilla has now gone into the top 5, replacing BTCS, who haven't announced the buy so far this week. So maybe they'll go back into the number 5 position. BitDigital are still at the 120,000 ETH number. That's the number that they announced on launch. So it looks like they've got more buys that are going to need to be announced soon. And the Ether machine are kind of stuck at 345,000 ETH as well. So I expect a lot of these guys to be making buys. FG Nexus have actually purchased 47,000 ETH. So that's really cool. And then a lot of these others, we're still waiting on them to go out there and purchase that ETH. But now there are 14 ETH strategy companies, which is really, really fantastic to see. And then if you actually look at the ETFs as well, like the inflows here have just been absolutely astonishing. Like, yesterday it was 239,000 ETH. The day before that was 118,000 ETH. The numbers here they just blow your mind when you like take a second to just think about it. It's actually I can't believe it. Like it's so much ETH. And then if you have a look at the supply dynamics, this is issuance. I think this is over the last 7 days. Yeah, issuance has been 19,000 ETH, just say, but the treasuries and the ETFs and burn have absorbed nearly 1 million ETH in that time. So just under 1 million ETH. So if you have a look at the 30-day, the number's just huge. And if you have a look at the last day, issuance is 2.7 thousand ETH. And they brought in 750,000 ETH. so it's just like mind-boggling big numbers. So yeah, the ETFs are doing very, very well, and they're going to get really, really huge. Sorry, not the ETFs, the strategic reserves. They're going to get really huge. And then how they're going to get really huge? Well, like I said, Bitmine here. I saw the statement from those other guys and we're like, actually, you know what? We're going to raise 20 billion. So they're putting paperwork with the SEC, says Bitmine Immersion, to raise its offering up to $20 billion to acquire more ETH. So it looks like they are going to try to go full steam ahead into raising as much ETH as humanly possible in this next period. And I think that, Tom Lee wants to hit that target probably before the end of the year at this rate. It's just absolutely gargantuan amounts of ETH that they're taking in. And then here one of the comments says, this fundraise alone could be enough for Bitmine to flip Michael Saylor's strategy, depending on the ETH price appreciation along the way. So yeah, that's really, really huge. Okay, and one of the reasons why Bitmine can sell so much of their shares is because the volume that they're doing on the stock exchange is absolutely huge, and they actually ran more volume than Amazon and Meta yesterday. So that just tells you that they're doing huge amounts of volume, and with that, then they are raising big amounts of money that they're using to buy ETH, and that's how they're able to accumulate so quickly. Like it's just astonishing amounts. Okay, and then here Vance Spencer had an interesting point. He says, I see Esper and BMNR combining to buy $20 to $40 billion of ETH before the end of 2025. He says most of which will be placed on chain into borrow markets, which will draw stables to loop or farm. He says this will be the most meaningful active capital injection in DeFi ever, the future of France. So what's really interesting here, right, is that, Ethereum is an economy. And on the economy, we have all sorts of different services. We have staking, we have borrow lending, we have yield farms, we have liquidity providing to trading pairs, all these different ways of kind of making money. And what's going to happen is with all this money coming on chain, so much of it is going to get plugged into DeFi and then trickle down into the rest of DeFi, and that is actually going to. The liquidity increase is going to drive the price like an incredible amount that, has a multiplying effect on the buying alone. So like I'm just going to give you numbers, right? Like for example, if you buy $1 of ETH, that might, increase the market cap by, $5. So $1 billion of ETH buying increases the market cap, for example, by $5 billion or $20 billion, something like, multiple there. However, if that $1 billion of ETH, then you go and put into liquidity providing for the network, or some kind of DeFi where it kind of trickles down across DeFi, then the added liquidity and the added depth of TVL that you will get will be multiples of that again. So these are the kind of things that I'm thinking about, like when I'm trying to realize just how much ETH has the potential to run right now. Like when it comes to something like Bitcoin, and Michael Saylor, right? He buys, he has bought a huge amount of BTC, but there's nothing that he can do with that BTC. It's not a productive asset. There's no economy for him to plug that into and earn yield or try to stimulate the economy. With ETH, this 40 billion dollars of ETH buying is just less than 10% of the whole if you want to call it like GDP of ETH, right? Like whatever. It's just such a huge boost that I can't help but think that it's going to have a massive downstream impact on the price of ETH, and just it's strengthening as that global decentralized economy. It's going to be magnificent. Okay, let's talk about some other stuff. So this is other news now, and this is another thing that could potentially drive prices of crypto like insanely high. And this is news that Donald Trump signs an executive order that has told people, retirement funds, that they are okay to invest in crypto. So this is something that the previous SEC obviously did not want people to be able to do. But we are living in a new era, and the new era says that crypto is go. That means that if you have a retirement account, a 401k, you can now have part of that money coming into crypto. There's a tweet here that I would love to read to you that just shows you how huge this is. So Tom Donlevy here says, this is way bigger news than the ETFs. And this is the ETFs that just brought in $1 billion yesterday, by the way. So it says in the US, roughly 100 million Americans have retirement investments vehicles known as 401ks. So it's every 2 weeks, a portion of their paycheck is routed directly into purchasing a mixture of stocks and bonds on autopilot. So there's no discretion, no direct purchase based on their predefined allocations. Most Americans adjust these allocations annually, if at all. So this is a huge driver of the equity market run and resilience over the past 20 years, a constant background bid for assets. So he says in aggregate, this is $12 trillion in assets with $50 billion flowing each week. $50 billion flowing each week. So we've seen asset managers recently kind of like change their advice on how much of a fund should go into crypto. It seems like the conservative number is now 1% of a fund should go into crypto, and aggressive one would say 5%. So let's just say at the 1% here, Tom says that this would bring in $120 billion of flows into crypto. At 3%, it would bring in $360 billion of flows. That's $1 billion a day, pretty much, into crypto. And at 5%, it would bring in $600 billion a day, which is nearly $2 billion a day into crypto. It says these aren't one-time flows. They keep buying once the allocation is set. So every 2 weeks, they will buy those amounts. And it says 401ks and digital asset treasuries with the money shelves put a ridiculous floor of crypto going forward and move the limit from the moon to Jupiter strapping. So this was like absolutely like mind-boggling, right? Like, at that 5% allocation, that's basically $2 billion a day that's coming into crypto. That is like, I don't have words to describe just how big that is. And when you layer all of these things together, you just realize that this is a new paradigm that we're in right now. Like this, we're not playing by the same old rules anymore, right? But let me actually talk about this a little bit more in a minute, because there's a whole lot to say here. But I'm going to thread all this together in a minute. So a couple of days ago, Nate Garassi here, who is an ETF expert, said that ETFs are the XRP versus SEC suit has been dropped, and the SEC are not charging XRP with anything anymore. And because of that, he thinks that BlackRock will file for spot XRP ETF. Now, at the end of his tweet here, he says, otherwise, they're basically saying that ETH and BTC are the only ones that will ever have value. And that's bold, right? The very next day, BlackRock called him out. Oh, that's what he says. And BlackRock say, at this time, BlackRock does not have any plans to file an XRP or SOL ETF. A BlackRock spokesperson told The Block on Friday. Now, what does this mean, right? So here, Nate says it'll be a mistake, like whatever, it doesn't make a difference, like what Nate thinks. But a DC investor here says, let me spell it out for you. So he says, BlackRock says only ETH and BTC get ETF flows. Then they're the ones who people go to for their retirement funds, and they will put them, through Trump's new executive order. So when it comes to the retirement flows, where are they going to go? They're going to go to ETH and BTC, and basically keep this in mind for when people start shilling alt layer ones, and you can understand what the reality of the situation is, what the fundamental reality of the situation is. Now, let me take a step back and kind of thread all these different things together, right? So there's four things. The first one, ETH treasury companies. They have pledged to raise billions of dollars within weeks. Literally within weeks, they're going to spend billions of dollars buying ETH. The second thing, ETFs. Now, these are two things that we already have. The treasury companies are already buying ETH, and the ETFs, they literally are hitting all-time highs in inflows for the ETH ETFs. They're buying ETH, right? As long as there's hype and attention on ETH, they are going to keep buying ETH in absurd amounts, and they're not stopping until potentially, the market cools down, or attention goes somewhere else, or there's a small dip in the price or something. They might take a pause for a few days, but the trend is bullish. The third thing is retirement funds, right? Retirement funds, the money, Nate and DC Investor here say, is this money is going to come to ETH. Now, that is the hundreds of billions of dollars a year, $2 billion a day, pretty much, a little bit less than that, coming to ETH and BTC. I don't know how that's going to be divided out. I don't know how it's going to work, but right now, that's what it looks like. Even though getting the pension stuff, might take, 6 months, maybe a little bit longer, maybe a little bit less, but that's not going to happen tomorrow. But what's happening now is, the retirement money, where does it go, right? It goes to 3 different companies. Most of it goes to 3 companies in the US. It goes to BlackRock, it goes to Fidelity, and it goes to Vanguard. Vanguard don't want to touch crypto. They said, we don't want crypto right now. We don't want, we want nothing to do with crypto. Huge mistake, whatever. That's fine. That's their prerogative. Fidelity, they have ETH and BTC spot ETFs. I don't think they have, no, they definitely don't have any other active ones, but I don't think they have applications even for any of the other ones. I might be mistaken about that. BlackRock, the biggest for ETH, the biggest for BTC by far, biggest flows, biggest, assets under management, everything. They said they want ETH and BTC only. Now, these retirement funds, when they come into the market, they will go to the ETFs, most likely, and they will buy ETH and BTC. So that's the third thing. Now, the fourth thing is retail. Now, retail is not here. And the way that we know that is because we don't see the social metrics, search engine results, people following YouTube accounts, people watching YouTube videos about crypto, people following Twitter accounts. Those numbers are still quite low. They're not as low as they were in April, when the market was kind of bottoming there, that local bottom. But they are really, really much lower than the all-time highs that we had in 2021. Now, what do those 4 things tell you? Those 4 things tell you that when money is coming and will come into crypto, it's going to go to ETH. Now, on top of that, you have a US government that is very, very, very strongly wanting the market to do well. Now, why do I say that? Is because, Trump pretty much in his first term valued a part of his quality of his presidency as the stock market performance. Now, he has been in the fight with Jerome Powell for many months to lower interest rates. And it looks like in September, Jerome will lower interest rates. Now, the inflation numbers, like we covered earlier today, came in with expectations pretty much. So that means that, lowering of interest rates is more likely than it would have been if it came in hot. Now, with those things said, that means a whole new wave of liquidity is going to come. Quantitative tightening will end, quantitative easing will begin at some point potentially, and the money supply will increase, and all of that money, so much of that money is going to come to ETH, like I told you, through the 4 different avenues that we have for money coming into ETH. Now, the 4-year cycle, that will tell you the all-time high will be at some point, this winter, like early winter, or maybe January. I think that's dead. People always say that when anyone says super cycle, you sell all your bags. But in putting those things together, how can you not believe that there's going to be some kind of super cycle? Like, how can you not believe that all of those things together are not going to keep this show going for as long as something in the US economy breaks? Now, when that happens, if something breaks, at that point, yeah, that's totally fine. You will get a pullback. Now, I don't know if that's going to be in the final quarter of this year. It potentially could be. I don't know if that's going to be in Q1. I don't know if that's going to be in Q2. Next year's a midterm year. I think that the Trump presidency is going to juice whatever numbers they can, like stimulate the economy, rig the economy, like whatever you want to call it, in whatever way they can to make sure that the numbers are as good as possible going into the midterms next year. It will be potentially the case of, small ease now financially, and then a much worse recession later. That could happen. That's a possibility. But I am of the thesis that, this government will do whatever they can, massage the numbers however they can, stimulate the economy however they can to prevent a recession from occurring anytime soon. But, you can't stay there off forever, right? As much as you might want to lie about numbers, the reality of the ground will be, different, and people's lived reality will be like really bad. So even though you might not have like, a recession in terms of, the Fed saying we're in the recession, you might have people on the ground and businesses, etc., feeling that they're in the recession and changing the situation. Until that happens though, until something breaks, crypto as a market will just keep going up. And, it will be a straight line up only, like ETH has been for the last week, but it'll be, a line that trends up and to the right. That'll be for ETH, that'll be for BTC. It looks like TradFi has picked its winners, and those are its winners. That's not guaranteed as of this moment in time. That's not guaranteed to be the case forever. But right now, it looks like ETH and BTC are getting that special treatment, and that is what makes sense. And that is why I am more bullish about ETH right now than pretty much ever have been. And that's not, that's just about the price, right? Also, like the technological stuff is being pushed in the most amazing ways, and really, really great things are happening there as well. So yeah, that's the way it works. Now, it's not all bullish. There is a possibility that, that things go wrong, like I said, with the economy. And there's some things that are happening in terms of developments that you might think that are not bullish on the surface as well. And one of those is today we had Circle releasing their report of their second quarter results. And one of the things that they highlighted in that is that they are introducing a new L1 blockchain called Arc that they want to run. And it will be basically the home of Circle and USDC, I guess. And it'll be, it'll be an EVM chain, so it'll be built on the Ethereum stack, but it will be its own thing, and it will be an all L1, and there'll be no link between it and Ethereum, except that they use the same virtual machine. That's not the only one, of course. We also got news of Stripe saying that they want to build an L1 of their own as well. Stripe, the biggest payment processing company in the US. And we also got news of Tether, that we've known them for a while, that they want to build their own L1. Now, I've got a couple of opinions here. One's from DC Investor and one is from Ryan Berkman's. I want to share both of those with you because I think they kind of like paint the picture. So DC Investor says that stable coins, it makes sense for them to go to their own chain, max VC grift and all that kind of stuff. But eventually there will end up being L2s. He says that because that's where the people, he says that the chains will get made and that they'll print the assets there, the native assets, and then those will get mostly bridged to ETH L1 and L2, and because that's where the people are who want to use them. And he says eventually they'll become L1s. So he uses the example of the internet and how that was siloed intranets and how it all became public eventually. That's the example that DC Investor gives. Makes sense. Ryan here actually has an interesting take. He says that Circle and Tether have both kept ETH kind of at arm's distance, and it makes sense that they're doing their own thing. However, when it comes to Stripe, it really makes sense to focus on Stripe and get the Ethereum, army, if you want to call it that, whatever you want to call it, kind of motivated to let them know that they're making a mistake. So he says, with Circle and Tether, they're not going to pivot to an L2. They've been around for a decade, and their opposition to Ethereum seems firmly cemented. But he says with Stripe, that's different. They're new to Ethereum. They already changed their mind about coming on chain before, and that's shown through them buying Bridge and Privy protocols. He says they could just as easily make an L2 instead of an L1, and linking up with Coinbase and Robinhood seems like the much smarter play than trying to go out there and grind something out on your own. So he tagged the CEO and co-founder and the other co-founder for Stripe to say, hey, like, you guys should change tack. I really think this is something that the Ethereum Foundation enterprise team, or maybe ETHZilla or any of the other, BD teams, now we have hundreds of them, right? Any of the L2 teams, any of the Ethereum Treasury Company teams, any of the protocol teams, they should reach out to Stripe and try to change their mind, because this could end up being like a really big deal. So, yeah. Okay, so earlier on, we mentioned Bitcoin security, and this is now a time for me to make a bold claim that I think the flippening will happen. The flippening will come. And here is a little test case of why that will happen. So some of you might, or most of you probably have heard of Monero. Monero is an old school, over 10 years old now, I think, proof of work chain that has privacy baked into the root of the protocol, making it very, very difficult to see what's going on in other places, and, has complete privacy from top to bottom, and it's good tech. The problem is that its market share is quite small, its market cap is quite small, and it has been 51% attacked. Now, Cubic here, this organization, kind of incentivizes miners to start working with them. And what they have done in that is taken over 51% of the market share. They've already done reorgs of blocks. They've already done all sorts of fuckery. And this basically is the future of Bitcoin. Now, you might be like, hey, Whack, what do you mean this is the future of Bitcoin? Bitcoin's on a way bigger, level. What are you talking about? What I want to say to that is, with Bitcoin, this $15 billion attack, when you have the halving, then, the amount of rewards that each miner gets will be halved, of course. Even if the price of BTC doubles at that point, the relative price of attack will stay the same, right? Because you need more miners to come online. So even if the miners are making the same amount of money, they are actually securing a protocol that's doubled in value. And that's the idea, right? When the hash rate when the halving happens, the rewards go down in half, the price doubles, it keeps an equilibrium. The problem is that those same miners will be securing a bigger amount of money, and $15 billion to attack. That is not that much. Eventually, this is the future for Bitcoin unless something changes. Now, what does that mean? That means that Bitcoin's thesis is at some point going to break. It might happen in 4 years, it might happen in 8 years, it might happen in 12 years, it might happen in 20 years. But at some point, Bitcoin's thesis is going to break. They will have to adapt, because either they will change the 21 million cap limit, which will break a fundamental promise that the Bitcoin protocol has with Bitcoin holders. That will either break, because they'll have to issue more Bitcoin to incentivize more miners to come online, to keep the hash rate high, to prevent the 51% attack, or they won't do that, and at some point the rewards of attacking Bitcoin, a 51% attack, will outweigh the cost of attacking Bitcoin, and it will happen. Now, like I said, that might be a long way away, but it's going to happen. And with ETH being as strong as it is right now, and the trajectory that it's on right now, and with Bitcoin's shortcomings, that will at some point lead to the flippening. Now, I'm very bullish on the flippening happening. I'm very bullish on the flippening happening before you might assume. I think Joe Lubin said it could happen next year. I totally understand where Joe Lubin is coming from in that regard. It could happen next year. It's going to happen. Yeah, good times. I'm excited for that. Okay, I'm going to end today's episode with the raffle for August. I'm sorry that I was a little bit late for getting this done, but Halula was kind enough to get the tickets, prior to the tickets. So Samus got 21 tickets, Blue AVM got 17, Meg got 7, Jasper got 7, Patches got 5, Shifrin got 5. So a whole bunch of people got tickets. That's really cool. Let me take that over to the... Oh, actually, sorry about that. That you just ignore that. That was a test run. Anyway, I want to talk about the raffle for a few minutes before we actually do the raffle. Let me just paste that there. Now, the raffle, I have been paying out $1,000 a month for nearly 2 years now. I think maybe more than 2 years, something like that. A long time. I've been paying out the raffle. And that money comes out of the income that I make from RocketPool. On this latest grant round, the GMC gave me a pickup. And the reason for that partly is because the treasury is really tight and they can't basically afford the money. We've talked about that on RocketPool a whole bunch of times, about the different things the GMC is doing to try to save money. One of those things they did was cut the income to RocketPool. Now, I was getting $1,000 before. Sadly, I just can't afford to give $1,000 anymore. So I want to reduce that amount. And I mentioned this last month, I think either in RocketPool or on the RocketPool thread, that I will be reducing the amount potentially at the time before the results came in to $500. Well, now I'm saying that I will reduce it to $500. Now, for this round, I'm going to have 4 prizes of $100, and the 5th prize will go to Halulo for getting the tickets and everything set up for the raffle. However, going forwards, I will need to talk to Halulo about changing our arrangement. But I'm not sure what I'm going to do. Either I'm going to do 9 prizes of $50 each with a 10th prize to Halulo, or 5 prizes of $100 each. I'm trying to figure out something else with Halulo, but that's kind of where I'm standing right now. But today there'll just be 4 prizes and the 5th one to Halulo. So let's have a look and see what we get. Okay, Jasper wins, and Samus, and Spartan, and Mig. So those are the 4 winners. The machine will just keep putting out more names, so just ignore that. But and then the 5th prize obviously will go to Halulo. But yeah, thank you everyone for submitting. I'm sorry that things are changing like this, but it's just sadly the reality of the situation that we find ourselves in the RocketPool community. However, things are looking up. While I was recording, I've had some technical issues today, so I had to go back and re-record some parts. But while I've been recording, ETH has actually had a gargantuan move, an absolutely beautiful move. We have seen some really, really great short squeezes happening here, and ETH has reached the price of $4,639.70 on Binance, which is just a cough and a sneeze away from new all-time highs. That is really, really exciting, and a whole lot of people are really excited about that. So I'm going to be talking about that more tomorrow. Maybe in tomorrow's episode we can talk about new all-time high prices. That'd be nice to think about tonight. But I'm going to stop recording here. The episode has been, I think, the longest episode of RocketPool ever, probably, coming in at around an hour, just under an hour and a half. So yeah, this is the most bullish I've ever been about ETH. It's just I can't tell you all how amazing this is, and this is the real time vindication of all those people who've been holding for all these years. We've been dreaming of this time, and it looks like we're here now, and now's the time to just hold on, don't get blown up, and enjoy the ride to come. So I'm going to end the episode like I said. Thank you all for watching, listening, and being part of the RocketPool community. I hope you all have an amazing day ahead, and I'll see you all tomorrow. Bye.